Hi everybody, it's Jared Johnson again, and welcome to the final video of this free course. I hope you have found it useful. This is a very important part, and if you're an experienced trader or a brand new trader or anything, this is absolutely something that you will need to work on, master, and will be a challenge for all of your trading, and it is trading psychology. So remember, here's a few breakdowns that we need to keep in mind with trading psychology, and it goes as follows. We're going to talk about developing some habits that will be helpful, getting on a good cycle of trading, and what we're telling ourselves, what we're doing when we're trading. So trading psychology is a big thing, and you're going to hear a lot about it. And I'll try to make it short and to the point here. Number one, here is something I've heard a million, billion, trillion times, which is, whatever I'm thinking about doing, I'm going to do the opposite. Or, I let my losers run too long and I cut my winners off too soon. I don't know why I took that trade. I got in because the market was going up or because it was going down. I read somewhere that such and such currency or stock or crypto was going to crash or was going to go straight up. Revenge trading, which I love. I lost money twice in a row, so I just had to get back into something to make something back. What's the result of that? Usually more losses. So these are things that I've heard many times. I've worked with thousands of traders, tens of thousands of traders, and I've heard these things more times than I can count. So if you can ring true to any of these, then this video is for you. Trading psychology. Why do we have this thought process of whatever I think I should do, I think I'll do the opposite? The question I have to ask myself is, what process are you following that gives you constant failing results? Why would we do something that gives us undesirable results over and over and over again? It's equivalent to hitting yourself in the face with a piece of wood. Not good. Why would we follow a system that always fails? Because our trading psychology gets a little bit rotten. That's why. So we have to ask ourselves a couple of questions. Am I a really specific rule-based person? Let's just be honest. Are you OCD? I'm OCD a little bit. I got to have a plan. I've got to have certain things written down. Or are you a freelance kind of a principle-based trader? I don't want to lose more than $100. So whatever that takes, I'm going to keep it at that. I'm okay making $100 or $50 or $500 on a trade. Some of us don't even know what we are, if we're really rule-based or principle-based. Remember, rule-based would say, I follow steps A, B, C, D, E to the law no matter what. Principle-based is, here are some criteria that I'm trying to always keep in place, and I will be a little bit loose with that. And we need to kind of identify where we are in that spectrum. So remember, we want to just create a process. We don't like losing money. We don't want to keep doing it. We don't want to have the gambler brain, which is something that gets traders so many times, that gambler brain. I'm going to hit it big. It's okay. I can lose 500 times because that 501st trade is going to be $1 million and it's going to make up for all my losses. We can't have that gambler brain. So we want to create a process that kind of takes the Hail Marys, to put a little football talk into that, out of the equation. So just remember, we want to create a bit of a chain reaction here. We need to know what our goal is, typically to make money. What's the process we need to follow? We talked about it in the last video. Trends, support and resistance, patterns, find those, trade those, follow that process, and then make sure that we have followed our process. And then what's the result? Usually a winning trade. Remember, practice is something more than just doing it over and over again. So make sure that you're spending a little bit more time on the things that you're a little bit worse at. Open yourself up to a little bit of criticism. Find somebody that knows how to trade better than you and show your trades and talk to them about what you're doing and get some feedback. That will be the biggest help imaginable. So remember these, deliberate practice, very, very important. It's great to have that buddy system, like I said. Find somebody that's a trader as well. Our community here, the Day Traders FX community, has traders all around the world. Chances are very good that there's a trader right near you that's in my group that you could meet up with and become, accountability partners, and be able to talk about your trading and what you're doing. And you don't have to be in the same city or state or country. There's Skype. There's all kinds of internet communications that can make it easy to just find somebody within my group or somewhere else that you can start to be accountable to and have regular weekly check-ins and talk about what you're doing and show your trading accounts and make sure you guys are practicing things together. So have a buddy. That will make a huge difference. Remember those 3 simple steps. We got to find that trend, those patterns, and support and resistance. I call it the TPS reports. Anybody that's seen Office Space, you'll know that reference. But just remember, keep those in mind. They are very important. So, putting it all together, follow your process, whether it's my TPS one or not. Make sure it's a process that makes sense and that will make money. Know that your reward works and that it's going to make you money. And know yourself. Figure out what kind of trader you are. And the fourth one that I think is so important and so helpful and so useful is, could you defend your trades to me? So if you and I were talking and you said, I took this trade at this time on this setup, and would we both be able to look at it and say, that's a decent trade? Now, it doesn't mean that you have to have the exact same trading style as I do, but you have to say, I took it because of these 3 reasons, or these 4 reasons, or these 2 reasons. And we could look at it and say, that's great. Because oftentimes I look at trades and people say, you know, again, we go back to those lists before of, I don't know, I thought things were going up, so I took the trade. That's not something you could defend to somebody. So take trades that you could defend to me, that if you and I were sharing our screens, we could say, hey, that was a good trade. Maybe it didn't work out, but that's okay. You followed your process, and it was a good trade. So make sure you do that. Take trades that you can defend to yourself, to your trading buddy, to me. Very, very important. People ask me a lot about money management, and there's a whole bunch of things to look at here. I would say that I'm a little more of a principle-based trader. You'll hear these kinds of things. Risk is adjustable per trade. That's very important, and I agree with that. 2 to 5% is common risk, meaning you put a trade on that in a worst-case scenario, if it hits your stop loss, it's not going to cost you more than 2 to 5% of your account. The larger your account is, the smaller you want those percentages to be. The smaller your account is, the larger the percentages can be. If you have a $2,000 account, losing 5% is not that painful. If you have a $500,000 account, you probably want to keep your losses down at 1 to 2%. So just kind of keep that in mind. But the rule of thumb here is that if you take a trade, risk an amount of money that is not going to bother you if you get stopped out and lost. Nobody likes to lose money, but there's that amount that you say, I'm okay with this. It's not going to ruin my day if I lose $50 on this trade, $100, $500, $20, whatever that number is. Find that number and make sure that you keep your risk at that. Remember, traders' anxiety is a real thing. So how do we fight it? Couple of things. Number one, reduce your trade size. Most of the time we're trading too large, and the second we get into the market, we're freaking out, and that's not good. So reduce that trade size. If you're stressed when you enter that trade, then your trade size is probably too large. Remember, leverage. Remember we talked about in the earlier videos, we put up $1,000, and the broker puts up $99,000. There's $100,000 on the line there. So leverage is a good thing. It can make us a lot more money, but it's also a bit of a double-edged sword, so we have to keep risk in mind. And the best way to do that is to reduce your trade size. Very important. Reduce that trader's anxiety. Remember, what is your trigger? What gets you interested in the trade in the first place? What is your process? Are you following it? What's your reward? Money, winning trades, and peace of mind, which is actually very important. So, I hate to say this, but remember, if we fail to plan, we plan to fail. So cliche, but it is so true. So just know what you're looking for before you enter the trade. Have a checklist, whether it has 2 or 3 or 4 or 5 or 10 items on it. Have that checklist and make sure you're doing those things before you get into the trade. Know what your plan is. Manage your positions, how to get out with loss, how to take your profits, and know where that profit and loss is. Rinse and repeat. That's what we want to do. So let's do that. Have that trading plan. Let's make some money. Let's have fun. Let's keep things low stress, because you can be a day trader and a low stress one, and it is very possible. So I hope this is helpful. Thank you for watching. Thanks for being part of this course. I hope you move on to the next section of the course. Thanks again for participating in these couple of videos, and I really hope that they have helped your trading and that they'll help you achieve a next level and a better level of trading in the future. Thanks, everybody.